I've spoken before about some of the interesting insights from the Altron FinTech Household Resilience Index. And some of you have been asking me questions about what is this index and what does it tell us about the health of our household finances. So just to give some background, this is an index created by economist Roelof Botha for Altron FinTech to try and understand the current financial resilience of households. And he has selected 20 different indicators, which are directly or indirectly related to sources of income or asset values. So the index looks at how these key indicators are moving each quarter, and then it also compares back to the first quarter of 2020 to kind of gauge whether our household finances have fully recovered from the pandemic. Now, some of the indicators are obvious choices like household disposable income, private and government sector salaries, and employment rates, because these would all talk to household income. But it also looks at debt costs, which would have a negative impact on household income as more money is going to pay debt. It also looks at investments such as trust assets and house prices to see if wealth has been increasing. Once you put all the figures together, what the graph is telling us is that there has been an improvement in household finances in the third quarter of last year. And this would be reflecting higher real salaries. We're finally starting to earn a little bit above inflation, as well as the start of those interest rate cuts. But it has also interestingly been boosted by the two-pot withdrawals. Now, two-pot has not been great for future wealth, but it definitely has boosted household income in the short term. So according to the index, we're back to levels in the last quarter of 2019, before the COVID lockdowns, which I suppose is good news. But what is interesting is that 8 of the 20 indicators remain in negative territory, with one major negative being the high debt costs relative to household income. And in my next video on the index, I'm going to examine the impact of these interest rates on our finances using the index and ask the question, are our interest rates just too high?